there has been a very strong demand for new FPSOs in the market, and this is driven by primarily aging of existing infrastructure where there's need to replace, but also new field developments, so expansion. On that backdrop, we have very strong demand in our segment. Oil companies in the last few years have been struggling to source FPSOs as there has been a consolidation in the contractors market. So where we are standing today is that from that perspective, in the last few years, we have been working on diversifying our funding base, tapping pockets of money for long-term capital. And now with this equity private placement, we are basically covering the gap, or we are filling the gap on the equity side. So with the resources we are having from a financial perspective, but also from a project execution perspective, we can work on new projects this year, and our business development people are incredibly busy talking to clients, prospective new clients for new projects. And we also believe that the lease and operate business we have been active in is the commercially most favorable to our clients, so there's very strong demand in what we do.
I'm very curious, Markus, because over the last couple of years, when we talk to people in the oil and gas industry, they often tell us that funding has been very, very difficult to come by because of the big net zero ESG initiatives that some say might have been a little bit too punitive, perhaps, on the energy sector. Do you think that that's probably thawing out, especially since we know that President-elect Donald Trump might be a bit more favorable towards perhaps reversing some of those initiatives we've seen over the last couple of years? Is that going to be a more favorable environment for companies like Yinson Production, for instance?
I mean, we have seen a tightening of the financing market in the last few years. However, the main driver for our business with very long-term projects we're having is the availability of very long-term financing. And this is also one of the key drivers behind the diversification into the debt capital markets, for instance, where we have pockets of money that have appetite for very long maturities. Now, the important thing from our perspective is that by diversifying our funding base, we're also freeing up exposure limits with banks that basically provides lending capacity for new projects. But we have not been really struggling with raising financing, despite the fact that there has been a very significant shift in the availability. But also, when we look forward, this capital velocity financing with banks pre-delivery and refinancing in the capital markets post-delivery is basically creating this perpetual that's necessary from a financing perspective.
And just quickly, Markus, you did mention, at least in the press release, that this is a pre-IPO fundraise. Is there a plan for Yinson Production to go to the public markets later on? And what is the timetable if that is the case?
Yeah. I mean, talking about timetable, we are looking for 3 to 5 years out now. The IPO is one of the options we are having, and certainly the most preferred option given the size of the business we are having today. But it's one of the options, and we will need to see how the capital markets look like within that period of time. The priority for us right now is to grow the company so that we are basically IPO ready from a capitalization perspective, from a revenue backlog perspective. Today we are having $22 billion, and with the growth ambitions we have the ambition of becoming the largest FPSO company in the world, basically.